Is this gonna send in? Why is this not sending in? Hmm. Bro, is this announcement gonna send in? Yes, boys. I can't actually see the chat on my Streamlabs. So let me get up the chat on YouTube. Afternoon, though, boys. I hope they're well. Huge news has just come out for the US. Well, I say huge news. Something we do get often, but it's something that is really going to dictate where price goes on from now. And how the fuck are we going to trade it, boys? We pretty much, I'll be honest, this is what we was waiting for this morning. I did say this quite heavily in the pre-London. Today's really important due to the inflation rate coming out of the US. Beautiful background to my computer just for us to actually fucking join to. But this is yeah. So let's get our TV open. Let's just see how the markets have reacted to this news coming out. Bearing in mind, CPI come out lower, so inflation come down to 2.7%, which pretty much come down by 0.1. We see DXY drop heavily. This is something that I've been anticipating a little bit now, is that weaker dollar due to inflation coming down, so interest rates can come down. A lot of people were anticipating higher inflation, the reason why, because of tariffs, but what we can really see is that it's coming a lot slower than what we really think, right? So we're not seeing that inflation really affect the market too much yet. So lower inflation is nice. They're able to cut interest rates, which is what the US want to do, but at the same time, it's still going to draw money away from the dollar, especially if they're now hinting towards a big cut cycle, which, bearing in mind, Trump wants 2 full basis points of. So we're currently at basis point. I think we're at 4.5%, right? Interest rates in the US. If Trump wants to see him down 2%, so bearing in mind you're probably gonna have a few 50 basis points cut, which really move the market. Say if we have 3 or 4 of those, then we're gonna have a really bearish dollar for a good bias, for a good few months really. Interest rate decisions really we'll probably see them come around every other month with the cycle. But that's sort of what Trump wants to do, right? He wants to see those interest rates lower. So in anticipation of what he wants, it just makes sense for us to now anticipate it coming down. But yeah, we've wanted this. We've wanted this news to come out. This makes it easier. Bearing in mind, a lot more money will be getting poured towards the UK and the EU economy. The reason why is because I was again speaking about that this morning, is the divergence between interest rates. So if we're pretty much signalling, which we are, that interest rates are going to get cut, and not only cut, there's going to be a cut cycle. What cut cycle is there's more than one cut. So there might be 2, there might be 3, there might be 4. But we know that the Fed, or Trump, should I say, who's pretty much going to have a massive influence on the Fed, I reckon, is wanting interest rates to get lowered massively. So we're probably going to see a cut cycle. Cut cycle does show that the dollar will be bearish for that whole cut cycle. So we haven't got... in terms of UK, we did have a recent cut, but the split from 5-4 from the MPCs, which is pretty much the people that actually vote for the interest rate decision in the UK. We had 4 people vote to pause. So that sort of does signal to us that it's uncertain that we want to continue the rate cut cycle. We just sort of wanted to have a nice little cut, which has now put us at what, 4.25 or 4%, sorry, I think. 4% interest rates. But now if we have no cut cycle, the divergence is pretty much the Fed are having a cut cycle, EU have stopped, and the UK have stopped their interest rate cycles. I said the UK, the BOE have stopped their interest rate cycles. So you do see a divergence there. I'm anticipating a very, very weak dollar, boys. This bias is probably going to last a decent amount of time as well if we do see a decent rate. Bro, why is this announcement... Okay, I'm just not going to send in the fucking video I done then. I made a video, but... Never mind, I can't add that in. It's taking so long to send in. A few other things that are quite weak for the dollar. Labour side isn't doing great. We saw recent NFP come out pretty poor. Unemployment claims come higher. So a lot of drawbacks coming out of the US at the moment, especially that signal today, lower inflation. Lower inflation is bearish for a currency anyway, but it's not just the way that's bearish for a currency. It's bearish because it does signal that we are going to have that cut cycle that Trump wants, and I can only assume the new Fed governor will put in place. So that's what we're anticipating at the moment, boys. This is sort of why I said it was really important this morning to the members that we really needed to see this inflation come out in order for us to then trade the bias off of that. Because this is sort of a nice quarterly bias, I would say. So we could get a nice 3-month trade moving in one direction. Great thing is about the pound, especially this week. I think GU buyers are going to be really nice this week. Is purely for the reason of we've got a lot of strong pound news coming out. We had, what did we have come out already this week? Claimant count. So essentially benefits, right? So there's less people claiming benefits in the UK, somehow. But there is less people. So because that's gone down, that is beneficial for the currency. And then we've also got GDP coming Thursday, I believe. GDP is looking to increase, I think 0.2% month by month. Bearing in mind previous was like minus, I want to say 0.1. Let's have a double check. GDP. Ooh, I hit a nail on the head. Come on. So yeah, we're pretty much anticipating a 0.2% increase. Previous was minus 0.1%. So you can see how strong the dollar's getting from these news events. Benefits coming down. Less wasted money on scum. GDP increasing. Our growth within our country is increasing, which is great. Beneficial to the pound, absolutely. So yeah, continuing anticipating this bullish move. For me, what I was really looking at on the daily time frame, which is kind of why I can accept why people were probably looking for GU shorts after this point, but I was massively waiting for this important news to come through. We had this daily candle. Let's just replay price, right? And just a bit of a mentoring, right? So coming back to structure. The basics of structure, man. And don't ever let this leave your head. And don't ever try and make it harder than what it seems. Keep it as simple as possible. It's simple. As we can see here, let's just ignore everything prior to this, right? Let's ignore this. This isn't here. Don't worry about this. This price action's in the past. We don't give a shit. It's too far in the past on our time frame. We don't care about the start of the year. We're looking at the last few quarters, right? What we can see here, obviously a bearish momentum. We can see that, right? Very, very obvious. So I can see the reason why people were getting into those sells. We had the fill of imbalance here, which was the internal liquidity, and then we come and obviously swept that external. So the internal and external rule was applied here. Makes sense if you went for shorts. But this is why it's so important, because this here, to me, is absolutely perfect for sells. Perfect for sells in terms of just from a technical standpoint. And what I'm trying to really get at is that why fundamentals is so key. And I talk about it a lot. I know it's fucking boring. It is boring. But at the end of the day, boys, are we here to have fun with trading? Not really. Do you know what I mean? Like, if we have fun with trading, it's probably gambling, boys. Let's be honest. If you're having fun when trading, it's probably gambling. Because you're probably risking too much. Your endorphins are running. But just understand that fundamentals are so key. Sells here would make sense. Absolutely perfect. In terms of everything that I've learned from a technical standpoint, sells here makes sense. The reason why it wouldn't, though, in terms of a real market scenario, is that we have a very high impact news. But it's not even a case of that we just don't want to trade it New York session. We don't want to trade it at all. I mean, did today even give sells? No, it gave buyers all day long. But I can only assume, let's say we've got this lovely daily time frame here, we've probably got people trying to sell within this demand area here, right? It makes sense. I understand why. We've had the big distro down yesterday, which again, sort of a pulmonary selling. And we are looking for that secondary selling coming into this next gap here. Well, this next... I've got way too many black lines on right now. Coming back to this area here, right? As you can see, we had a little sell down. Probably a lot of people getting into sells, which is perfect for the market, for where we're actually going. And obviously, at this point, you would have got induced and price would have run up. And the lightest way possible molested you. I could have said that in many, many different ways. But again, fundamentals played its part today to really push that buy up, as well as have that manipulation within this area here. So the move up was perfect today. Again, I wouldn't say trade it. I mean, we had bullish GBP USD news, which was perfect. But then come to the dollar, it really did shine throughout New York. But now, which is great, and which is sort of the buyers I want for the rest of this quarter, bearing in mind, I'm pretty sure we've only got this month left of this quarter. No, we've got this month and next month, right? September's the end of Q3. So we are really getting towards that back end of the year now. And I want to see this bias come for a good quarter, or maybe to the end of the year. I can see the US... I don't think the US are going to cut by straight 2% interest rates. That can't happen. That can't happen. That would be insane. Realistically, when it comes to interest rates, inflation needs to be sorted. Inflation has come lower, which is nice for the US in terms of cutting interest rates. But without that 2% target, I don't understand how they can remotely drop the interest rates by 2%. So it would definitely be a slow process of cutting. And then again, that would be pretty much a long, prolonged process of the dollar being bearish, where we can obviously take advantage of that, looking at GU and EU buyers. In terms of EG, both pairs are quite bullish for me, EG. The pound's obviously stronger. It's had news come out today. Makes sense how it's had that big move. But GU and EU in the near future, people, I think is absolutely perfect for buyers. That's what I would say. Obviously, I'm trading live to everyone during the London session, well, the first bit of London session, shall I say, to the members in the pre-London. But I would say that's the best positions we'll be looking for the next few months. Take it with a pinch of salt. I'm not saying the price is just going to move up. We still need to have that interest rate cut, and we still need to have a lot more stuff come out. But that inflation coming down does really help the fact that they need to cut interest rates. There's obviously going to be a lot of other stuff coming through as well. The reason, by the way, boys, the reason why inflation needs to come down, this is good to know. The reason why inflation needs to come down in order for interest rates to come down is because, again, it comes back to a balanced economy. If you have inflation too high, you're going to need workers. Workers are going to... This is why people go on strike, because they don't earn enough money. First of all, there's less selling power, but lower interest rates. Doesn't make sense. And then you're going to have a lot of people who are working that are just not going to earn enough in order to fucking live. If interest rates are high... Um, I mean, it depends on what side of the economy you're on. That's the thing. There's always someone who benefits in one side of the economy. Lower interest rates is good for everyday people, right? Retail heads. Lower interest rates is also good for businesses, but then isn't good for banks. Unless they need to borrow a lot of money. Do the US need to borrow a lot of money? Yes, but are they already in a fuckload of debt? Yes. To be fair, that ease from the EU economy has definitely helped. Bearing in mind the tariff scenario between EU, the EU and the US is pretty much 700 billion in 3 years is what they're going to invest in their country, and as well as 600 billion invested into, I'm pretty sure, pharmaceuticals, or I think EU have to buy something off them. I can't remember if it's pharmaceuticals or it's defence equipment. I can't remember what it is, but it's something. So they've got a good deal out of that. Bearing in mind, that's going to lower the US debt heavily. I think they're in about $30 trillion debt, something like that. I think it's more now, 33. It's probably more than that. Let's actually double check what the debt is in the US. Good trades today, boys. If I'm being honest, it's the same of what I've already been saying. GU longs continuations. I know we've taken Prada high. If you're someone that doesn't like trading, outside of, let's just say, doesn't like trading, without the premium or discount, depending if you're bullish for it. Obviously in this scenario, you'd be looking for price to be below the Friday high 100% and below the Friday 50. If you're someone that doesn't really go for that, just wants a continuation, honestly, GU longs should really continue up. That strong pound, with the strong pound news coming in 2 days' time, with only other US bet. We've also got PPI. I'm pretty sure this week. No, we don't have PPI. We've got core retail sales, which is coming lower, forecasted lower. So we pretty much forecasted another bullish pound news and forecasted another bearish dollar news. Right, sorry boys, I've just not said anything to the chat, but I just wanted to say essentially where I was in terms of the market, what positions I'm personally going for. That's the exact positions I'm going to be going for the next. We'll see. But obviously we need to confirm buyers, and interest rates do need to be cut realistically, or just further anticipation of it. We don't really have to wait for the cut to sell, because if the market anticipates it heavy enough, then we're sweet. But bearing in mind, it is still next month, September 17th, so we've still got a little bit of time. There could be some data that comes out well. Labour market might come out well, and stuff like that. But afternoon, boys. I say yo if you're in the chat, boys. I'll be real, I'm not. PPI is Wednesday. Oh, it is. We do have PPI. Oh, yeah, we do. Core PPI. That's looking to come higher, which is not really good considering they need lower. Producer price index isn't as important in terms of retail core price. In terms of core. Let's go back to July 16th. Oh, fucking hell, that just... I don't know why I tried to do that. July 16th. Forecast 2 came lower. So, yeah. That's not looking... To be fair, that's not looking awful for the... for the dollar, the PPI, but bearing in mind they do need lower price indexes in order for inflation to stay low. DXY again is exactly what we want though. DXY doesn't look bad. I think the reason why GU is quite difficult to trade because it's already taken Friday high as Friday. It's already took a Friday high, right? DXY, we could have that rebalance back to the Friday 50 and then continue again, sort of that internal external rule. Okay, come and feel this internal as much as possible and then continue and grab these lows. EU hopefully isn't taking the Friday higher. No. Again, the rebalance of the EU be nice. Come back to feel some form of imbalance. DTO is cool with me. And then continue. We've not seen that Euro strength come through massively yet. And again, we know we are bullish for the EU economy. But we're not really moving the Euro. Euro's not massively doing too much. It's not doing too much. Yeah. Would you say Q4 is always slow compared to the other quarters? I would say... I'll tell you what isn't. Gold isn't. Gold is not. December gold is insane. For you gold traders, December is the best time to trade gold. It goes insane. The volume is nuts. Other than the Chinese New Year, it's like one of the most popping times for gold. I'll be honest. More time it's bullish. More time you see gold come up. Massively depends on what geopolitical events are happening at the time. But gold does have a real big influx of volume from December. Take advantage, my gold traders. But Q4, think about it, right? When it really comes to these markets, we are thinking of actual traders. So when we talk about volume, we talk about obviously other traders, right? That's what we're talking about. So let's think about it. In a trader's year, right? There is many things that stop them from actually trading, right? There's one massive thing, and that's why right now there's a lot of low volume. It's summer. Most traders are on holiday. That's something to realise, right? All traders are on holiday. All of them. All of them are taking their breaks. Summer is the time where a lot of traders take their breaks. That's why the volume's low. That's why normally Q3 isn't the best in terms of trades. Q2 is always, in my opinion, the best. But Q4 is actually a really good time to trade. For me, I wouldn't say December's the best for FX currencies. Sometimes that's an anomaly. I've had a year where it's been half alright, but there's been years where it's just been, for me, not even worth trading. But Q4 coming back, September is a very, very, very good crucial month. It's when everyone's coming back from holiday and everyone's moving about their portfolio. You see people essentially just reposition themselves, take profits, take losses, whatever it may be, and restart after sort of September time. That is where volume comes into the markets. September, October, very good times. November's been alright, but December does lose a lot of volume. Again, it's sort of back to that sort of festive time, but like a holiday, right? It's Christmas, it's a holiday. A lot of traders will be sort of off trading for the time being. September, boys, is going to be fantastic. In fact, I think it's going to be a really good time, especially when we have quite a good bias on the dollar at the moment, especially September 17th. If we get that cut, that bearish bias is lovely. But again, we've got to get ready for it. But that's what I'd say. The best thing to do right now in these markets is get ready for those good fucking sweet times. These markets are properly moving a lot more wavy than normal. What I mean by wavy is they change frequency quite a lot. What I mean by that, right, is pretty much at some points we've got a good bias, the market's flowing nicely. That's lovely chilled waves. And then sometimes we've got a bias which is holding for a week, and then we've got another bias holding for like 2 days, another bias for another 2 days, another bias for a week. It's going crazy. So yeah, at the moment we're massively waiting for that time where we see a big distro and see some nice volume influx into the markets. August, we're probably not going to see that. We might see it towards the end, but September's really going to input. So if we can put ourselves where the money is before that and actually understand where we're trying to go, we'd realise fundamentals is probably the best chance we've got of getting the best buyers for the rest of the year. I know a lot of people do look at trading from a very short-term perspective, But there's something I want you guys to understand, which has sort of made me put myself in positions where I'm not losing trades and I'm only on the right side of the market. And that feeling is so much better than placing so many trades and maybe getting more percent than me. But the feeling of actually knowing like why a price is moving in a certain direction has second to none bravery whilst in trades. I'll be so honest. If I know I've got the volume of the market with me, I'm happy. And that's not always shown through indicators because a lot of the market is very manipulative. Most of the volume is mainly shown through where investors are putting their money. That is where you really see where the money's at. Once you see where the money's at, man, you get there with them or you get there before them. And then you trade. That's the smartest way to trade in my opinion. The best way to trade is that. I'm still in replay mode. We are getting a nice rebalance back down to the Friday 50. GU still got a lot more to do. The XY is coming. The XY is... Put yourself where the money's at, man. Yes, Skull, what's good, my boy? Shane, what's good? Stu, what's good, brother? Well, what's happened, Stu? Mate, if you have 5% up on FTMO, would you take it? Would you take it? Sorry, would you take it production? Am I an idiot? Say that again, bro. Yes, Ralph, what we saying, brother? Luke was good. I know December's usually crap. Yeah, exactly as you say, corresponds with when people are on summer winter holidays. That's the one, Luke. I think every 4 years you have these liquidity cycles in the market too, right, so that you can make things different. 100%. And something that's quite important to note that happens every 4 years is you have a different presidency in the US. That has a massive impact on the global markets. Massive impact. And that's one of the reasons why these markets have been so different to the Biden markets. That's what I'm going to call it, right? We'll call it Biden and Trump markets because that's pretty much the transition we've put ourselves into. As soon as we had these Trump tariffs and all this stuff, we've seen a massive shift in the markets. As soon as he's come into the White House, it's been a big shift, and we know that. And now what else is he doing? Now he's pretty much demanded the Fed governor to leave, and now he wants to hire someone else who's going to really take his opinion, right? Trump's going to get someone in who's on his side, right? Who thinks interest rates need to be cut. So a big shift in these markets, boys. A big shift. And the reason why is because it's a brand new cycle. And I like how you brought it up, Luke, about the 4-year cycle. Because I see it in the exact same way. Especially from a quarterly theory perspective, it makes sense. But I totally agree with you, Luke, man. Totally agree. Boys, by the way, these streams are always recorded, right? So if you think you've missed anything, boys, just go back. And if you want, just fucking record it and just have the video for yourself. Because some of this stuff is going to go over your head, but some of it will be an absolute fucking golden nugget. Because it's something that's helped me so much. If you boys know me, and if you see me live trade London session, you know zero emotion really runs through me. It's either yes or no, and I take my bias from two things. The ALG strategy, which is the fucking bollocks. I'll be honest, it's the one. Best, honestly, for me, one of the nicest strategies to trade throughout London session. I mean, I don't know if I've just traded it long enough to notice exactly how it works. Probably is because everything's time based in trading. The more you learn something, the more you're going to be better at it, right? Or the better you're going to be at it. Yeah, what was their debt? What is the US's debt? The US's debt, $37 trillion. Okay, so again, quite a lot. But again, the EU tariff deal does benefit the US in that perspective. Bear in mind, it's a 3-year deal, and I kind of rate that for Trump. It's a very good deal that the US got. Observing Ray did point out the US debt has tripled over the last 2 decades, now exceeding $37 trillion with interest payments nearing $1 trillion annually. Fucking hell. Jesus. But yeah, continuations for prices is sort of where we're at. But we've got a 15-minute that's been formed here. Looking for continuations of this. Again, we are quite close to... I mean, we're half an hour after news now, which is nice. That's nice. Debt surpasses 120% of GDP. Do you know how nuts that is? The US now carries one of the highest levels of national debt relative to economic output among major economies. The fiscal burden includes over $1 trillion annual fees to pay back that. That's nuts. That's actually crazy. So again, if growth isn't increasing in the US, that pretty much means the US is shrinking as an economy. Pretty well, I say that. Shrinking as an economy, sort of GDP going down. But debt is come above GDP now, so they're in a shit position. They need to have their GDP growth badly. Wow, 120% of GDP. That is fucking crazy. EG, I mean, I wouldn't really look towards EG. I mean, we've had I mean, there was no trades today for EG. There was no trades this morning, I would have said, to be honest with you. EU didn't give anything. You could have said there was GU buys. I mean, what time did we grab that low? 6:45. So there was potential buyers. I mean, it didn't even come back down to the 50%. And it already took buy side liquidity, so it kind of defeats the point of the Asia liquidity. But again, did have that nice move to the upside, and I would say GU buys from now on are really good trades to have. Are very good trades to have. Yeah. Yeah, if you lot manage to get Eze as well, you lot are laughing. Wait, who's getting Eze? What, Spurs, bro? I'll be tracking London from Endon next week. I'll be back trading London from Endon next week. Lovely stuff, Skull. Where you been? You just take a little break, man. You just take a little break. Or have you just been trading 2 sessions? Yeah, sorry, Essie, what'd you say, mate? If you were 5% on 10k FTMO, should I take payout or go for more? Payout, bro. Defo payout. Doesn't matter the account size. Get in the rhythm of not being greedy. And when I say not being greedy, don't put it in terms of monetary value. Put it in terms of percent value. 5% is very good, brother. If you can get that on a 200k account, which you will, bear in mind, you just got to do the exact same thing, minus psychology, right? Get yourself in the rhythm of getting 5%, getting a payout, getting 5%, getting a payout, getting 5%, getting a payout. Because you don't want to have that sense of greediness. 5% is perfect. 5% is more than enough, bro. If I said to you 3% a month's perfect, what would you do with that 5%? You'd run away with it. You know what I'm saying? Payout instantly. Payout, bro. Payout, increase funding. Right now, your goal isn't to make the most amount of money with the 10k. You're meant to make your money, buy more funding, and then you can make more money with the funding. Don't try and make more money with the funding you have. Never ever increase the percent you make. Always increase the amount you have. That's one of the other biggest tips I'd have for you as well in trading. It's all about money. It's a numbers game. The more money you have, the more money you're gonna earn. Obviously, right? We're not silly to that. But that's why I'd say prioritize actual growth of fund before really going for higher percents. I would even say go for higher percents because you don't need to, right? If you get 5% on $1 million funded, that's 50 grand a month, which is nuts. Minus profit split, whatever. It's a lot of money, right? So get in the rhythm of doing that. And you're in the rhythm. You've done it once. Now repeatedly do it and do it and do it again. Yeah? That would be my advice to you, brother. So the cut will be negative for the dollar. The cut will be negative. Lower inflation's negative. Less money circulation within the country. Inflation coming down is bearish. Interest rates being cut is bearish. A few reasons. One, because I said about the divergence. All right. You've got the EU the EU stopped their cut, so they're not cutting. GU, we're anticipating they're stopping their cut. We'll have to look at data going forward, but GDP's good, Labour's good, so it looks like we probably won't. But the US are going to have a cut cycle, so there's a difference between the US and the EU, and I'll put GU, what donut, and the UK. But the US are going for that cut cycle. So that divergence there is bearish in itself. But bearing in mind, if there's lower interest in the US, there's other areas that will benefit. The dollar won't massively benefit, but you're going to see the economy get eased. And what I mean by that is lower inflation will allow that government debt to be lowered. Okay, lower interest rates, lower. It just needs the ease, you know. Like I said, the debt's very high in the US. That needs to come down. Inflation is minorly coming down, which is good, enabling that to happen. But when you go for an interest rate cut cycle, it shows you're essentially on your back foot. And put it this way, it's like you're throwing weight off of the boat so the boat can float. Put it in that perspective, right? Say if you're sinking, you've got to throw as much off the boat until you're fucking not, and you can actually get out of that trouble. So sometimes, boys, you need to go back in order to go forward, and that works in an economy very well. It's hard for an economy, especially nowadays, is just to continue in a bullish momentum. There's always going to be a crack in there, right? There's always going to be a crack. And the US right now are essentially trying to ease their economy. But they're in for the long run. Exact same reason why they had these tariffs in the first place. Why did they have these tariffs? Why did I have... I just spelled tariffs. Is it 1 R or is it 2 R's, boys? Just let me know. Let me know if I'm an idiot or not. That just looks wrong. I'm going to go over it though. Tariffs. Why have they brought tariffs into the markets? Why have the US, who, bearing in mind, started the global trade network, mainly the full global trade network, why are they now putting essentially more tax on the US companies, their own country's companies, from the other manufacturers? Because they want to have manufacturing to themselves. It's a very long process because we know that the US are massive on manufacturing. Or not the US, sorry, China. Or not even just China, the whole fucking Asia is massive on manufacturing. Some European countries as well, like EU's cars, they're mass manufactured, and they're fucking unreal. Hence why tariffs on EU on the automobiles. Hence the tariff tax on China imports and everything to do with China. Oil, especially some South American countries like copper. Copper, I'm pretty sure, comes from like Brazil or like Peru or some shit. Where the fuck does copper come from? I can't remember where it comes from. But the US get their copper from, I think, like Peru or some South American country. Let me fact check myself because I might be lying to you, man. Where do US get their copper from? There we go, Chile. Yeah. Okay, Chile, Canada, Mexico, and Peru. So those type of countries, right? Hence the tax on copper. The US want to bring manufacturing back to the US, all right? Hence the tariffs. Hence why they don't want that export to be too high in regards to imports. They want to essentially export more than they import. The US import a lot more than what they export. Hence why these tariffs came about in the first place. Trump thought, you know what, fuck that. our country needs to get a bit more growth. We need to be a part of that global network where we have high exports, like China, like fucking any other, like loads of Asian countries. So what I'm trying to say is, boys, is it's a long process to get the US economy where they want to get it. So, like I said, sometimes they need to go back before they have to go forward. And we're in a situation where right now the US are going to have to go on that back foot in order to then go ahead and go on that front foot and start increasing that GDP and start making that America great again, if you may. That's the plan for the US. So for me, bearish at the moment. I do want to see a nice, like I said, reversal back to imbalanced areas so we can go ahead and potentially long off. Not really on GU because we're not coming back to the discount. We're just coming back to Friday. But EU, as you can see, come back down to the Friday 50. We just got to see if DXY followed suit, which it has. So we'll see if it has that reversal now. We'll stay on this 5 minutes, see if we get a trade through. There's no 5 minute, of course there fucking ain't. We've got a little 5 minute here, it's not even a fair value, it's not even a wick. We'll have a look. Might give us another 5 minute fair value gap, to be fair. But that's essentially where I'm at with the dollar, my thinking with the dollar. That's where we're at, boys. I've got 9 days left, Stu. On what, Shane? Everything in life goes from external to internal. No cap, man. Okay. And yeah. When you get your account back, well, when you request your payout, you will get your pass fee on top. So, however, pass fee, your account fee on top. So, if you pass the challenge, you'll get that money back whatever you paid for the challenge. Which again, I'd say invest that into a new account. Get that 5% payout with that. I mean, do what you want, bro. Obviously, I'm not your fucking financial advisor, but from my perspective, the best way to go about it would be get that 5%, get the money back from the 10k, then try to grab the biggest account you can, or 20k, or whatever you're willing to lose. You know, the reason why you've done so well on that 10k account because you don't really give a fuck if you lose it. Let's be honest, right? It doesn't cost that much. But try and up the account size so you can sort of get your psychology a bit stronger. It's harder to trade with more money, obviously, in terms of from a psychological perspective. This is Bloomberg. I travel for months at a time. I probably reside in Isle of Wight. Eventually got too many kids about still a minute for rest of the other. I want to move away once I've got grandkids. Yeah, that's the thing, man. That's the thing. Holidays are good, man, but living somewhere else for me, I think, is difficult. Month here, home for a few months, a quarter, whatever. I think that's the way, the best way in my opinion as well. Family's everything, boys, man. I'm not gonna lie, family's everything. Give me 2 6, boys. I better get this call. Actually, not gonna lie, 2 6. Sorry, lads. I need to set that call. Oh, exactly what we was just fucking talking about. We were talking about it 10, 20 minutes earlier, bitch. Say it again, just so we know that we know everything before you, Sarah. Boys, you don't even need Bloomberg anymore. You just need me. No cap. No cappity cap.
Sarah, literally just a minute here, but for those who've said that this market is too concentrated, that it's starting to look like a bubble, what would you say to that?
Yeah.
I've been in the industry for 30 years and technology has made this market look concentrated.
30 years? How fucking old are you?
So I would be careful of just trading in and out of the markets based on valuation because that can be very painful. I was a small cap growth portfolio manager in the late 90s, so I lived through that period where markets and tech looked expensive. What they have going this time that they didn't have in the late 90s is that earnings growth. In the late
Yeah, ACG are good, man. I'll be real. ACG are so up there.
profitable. If you look at the tech leaders today, that's Microsoft.
They are up there.
Nvidia, Broadcom, these companies have very strong sales and earnings growth. So I think that is what is different this time around.
It's an important point. We're talking about big, mature companies, Sarah. We're just...
A rebalance is perfect. Just want to see the continuation of it. Where we DTO could be fucking tasty here. DTO could be tasty. Keep our real eyes peeled on this one, no cap. Let's see how react off this this DTO. See if we have this continuation down. Just back to that Friday low, really, and that will really confirm that we're going to start having this move in the direction we want. So let's confirm that. Or again, it could be the move back down to the Friday 50 in order to push price up. This is sort of where we've been in the markets at the moment. Technicals have been pointing to the upside and downside. Is something to massively bear in mind. That's that manipulation coming out in the markets, which we've been having for fucking ages now. Ages. Ooh, how many subs are we on now, boys? 2,100. Let's go.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook. Take the long run. When we went public, we put a timeline up on the screen for the whole company and all hands meetings. And that timeline went from
Not gonna lie, Bloomberg, I'm unbearable to listen to sometimes, so I just go fundamentals. Oh, come on, Tommy, just get the fundamentals off you. I'll be real though, if you ask any question about fundamentals, I'd probably have it in there somewhere in this brain. A lot of my stuff does come from Bloomberg. A lot of it just comes from my own analysis of the difference between what news comes out, how does that affect other news, how does that affect the currencies, whatever. But it's important to know, Tommy, which is good that I know you need to keep up with it, even though this shit is sort of unbearable. The best time to find the bias in the market, boys, is New York session. The amount of stuff that comes out in New York is great. I do trade London session, only London session, 7 till 10, that's it. But come New York session, we have a lot of news coming out, which is very important. And again, in terms of our bias for our currencies. And something that's really going to matter for the next day, possibly the next week, possibly the next month, possibly next quarter. So keeping up to date with it is so crucial. But New York session is a great time to actually gather info. Gather info from the US data that's come out. Gather info from the markets that we've had, technical point of view. Understanding how bonds and stocks have been trading. Bear in mind, bonds are up at the moment. But the 10 years not done awful this year. The US 10 year. They've cut interest rates once, I think. Have they cut interest rates? Actually, I don't know if they've cut interest rates yet. Fuck knows, can't actually remember. But we've seen a decent drop down since the start of the year. Start of the year was around here. We had around we had highs of 4.8. 4.8% government yields on the 10-year bond. Yes. It's 2:30, boys. Everyone's getting gassed. Everyone's allowed to do a load of code.
In the free market, it's actually the small caps that are outperforming today as you see those treasury yields come down, especially at the front end. Traders saying that September looks like a lot for a Fed rate cut. You can see the bells ringing.
Yeah, the 4.8% government yield is very high. Why? Because that means they have to pay back a lot more on what the US borrow. Now it's only 4.3%, and again, when it comes to economies, these digits may seem small, but 0.5% is massive. For example, they normally have to got to pay what, $1 trillion. Let's try and write this in. Bro, imagine you have to pay this a year. Bro, I'd shit myself, man. Your country has to pay this amount a year. That's fucking nuts. Is that $1 trillion? 3, 6, 9, 12. Yeah, it's $1 trillion. Is it $1 trillion? Yeah. Fucking hell. Annually, you got to pay that. And bear in mind, the debt you in is this. Imagine being in this much debt and still being like, oh, wait. Imagine being in this much debt and that debt, bearing in mind, is going up. That is insane. But yeah, it does really help what the government have to pay back. When the government yields are lower, pretty much means they got to pay lower interest on the money borrowed from whoever bought the bonds. So that is definitely helped in terms of the debt. Like what I've just read, we have seen in the recent decades that we've seen an increase in the debt. So it's quite nice that this whole year we've had a drop of 0.5%. Of that, so that is very beneficial from the US, something that you do have to take away as a nice benefit. We'll see if we do come back up to that DTR weekly trope, and bear in mind we do have a bit of a news gap here, if you may. A noog. This is what we call a noog. A noog. It's a fucking bare weird word, bruv. Wait, you man, say noog. Just say it to yourself. That is the weirdest word to say. This is what we call a noog. I'm keeping that on my fucking chart. Fucking bare weird word to say, bro. I ain't gonna lie. What do you think of EJ today, my matey? EJ, yen's still weak. EJ's bullish, and the euro's not that strong. But like what I've been saying recently is, I mean, it would be nice to see the yen be bullish again. We've not seen it massively come bullish. The yen, the DXY's obviously come back up, which has driven that JPY down back down a bit. But again, the yen is going to benefit from the dollar being bearish. So yeah, I think we can definitely see a flip in the yen soon. Let's have a look for any higher time frame POIs in the basket. Are we at any higher time frame points? We're definitely towards filling most of this monthly fair values. 12-hour, half a day. We'll see if it comes down there. Could get a flipping price there. Keep your eyes on the dollar first. A lot of that imbalance has been filled, and I think we've definitely come to the bottom OT point of this range. So we're in the final.
calmer about inflation in the outlook for the U.S.
We're in the final OT level here.
see an incremental slowing for the economy. We started to see
So we'll definitely see how we react.
came in at 73,000. And the Fed rate cut for September, whether we get 0, 25, or 50, we're in the camp of 25 with upside to maybe a 50 basis point rate cut. That would depend on how do non-farm payrolls look for August. Do they come in again sub 100,000 and are they disappointing? How does the next CPI number look? The Fed has stated that they would look at inflation related to tariffs as a one-time bump. So I think that's what the bond market is.
So again, we do still have one. Until the rate cuts, obviously it's the 17th of September, we still have an NFP, which is important to determine what that decision is going to be, and we also still have CPI, and obviously disinflation is important to know in order for the bias of the cut
Within that segment.
Sarah, even though
or
there's
the interest rate decision. We'll say.
to your point, we saw a whole host of weak auctions across the curve.
So we still have a little bit more news to go, but that first inflation data and the July data we got from NFP was very bearish for the dollar. We'll see how this goes from here.
Those are issues that have been bubbling up. The growing deficit has been something that investors have been thinking about for quite a while. High interest rates, of course, even more problematic for the deficit. So I see that as a structural, medium-term to longer-term issue that the U.S. needs to think about and how to deal with it. In terms of looking at the Fed independence, there's been some volatility around that for equities as well as for bonds. I think the Fed will stay independent, and we'll soon find out what's going on with the next Fed chair nomination. Those are issues for the bond market, but I think generally U.S. safe haven status remains intact now that we've gotten our arms around what's going on with tariffs, and the economy is slowly decelerating, but not at a rate where
Yeah, what is this top fans thing?
positives for the bond market, and why we've seen treasury yields move to a more stable base versus what we saw in April.
Well, to your point on figuring out who the next Fed chair is, it feels like that potential list continues to get longer. We heard from Jim Bullard on CNBC this morning saying that I'll accept Fed chair job if we accept Fed independence. So a lot of question marks there. But Sarah, before we let you go, I do want to ask, what is your preferred haven in this market? We're talking about the bond market. It feels like treasuries in particular have been a bit of an unreliable hedge. I don't know if gold near record highs is trading as that hedge, or whether you see somewhere
Gold's
else that
definitely not the commodity to be in right now.
I like areas which have their own structural growth drivers that can remain resilient in any.
Let me also add we are still within this bullish range. We've not broke out of this daily range since April. That's not all-time high as well, bearing in mind. All-time high. Is it all-time high? Oh, it is. Yeah, I thought I said. I didn't think that said 3.5. I thought that was only 3.4. Okay, that is all-time. But we are anticipating that break at that all-time high, especially with that weak dollar. Could potentially see a nice bit of gold, actually, to be fair. But we've seen gold follow dollar quite a lot recently, so it's probably why we're seeing gold down today, even though the dollar's started to have that really bearish move. Noog.
8 minutes into the Tuesday trade, and you can see we have some pretty good breadth on this rally. The S&P 500 higher by about 0.6%. You have more than 400 names.
S&P's up nicely today. It was down quite a lot this morning.
Leading the way higher.
My house is like a sauna.
Alphabet, Amazon also putting up a fight as well. That is leading to
Oh, your house. I thought you said mouse. My house is bare hot as well, man. I ain't gonna lie. He's fucking well hot.
Is up there at the top, reporting pretty poor earnings, or at least not being received well by the market. Nvidia, you can see trading places here, switching around, but Nvidia erasing its gains. And we did have the information report that China told companies to halt their orders of Nvidia's chips. That seems to be affecting Nvidia's sentiment. But let's take a look at
Definitely. Nvidia should be down. We've had market open now, so we should see Nvidia come down a bit.
out of 11 in the green. Communication services and financials up top. Your relative underperformers today.
Weird PA.
Consumer staples and utilities,
But we are anticipating that bearishness. Do want to see the XY come up a little bit more. That would be favourable.
That bond yields have given up some of their gains, or rather, we're looking at a long end that's now pushing higher, and only a front end that's coming lower. It is the continued optimism.
Could be some really nice trades coming soon.
Of the bond market. Speaking of some of that pessimism, you mentioned it, Katie.
I like EU because you're not taking Friday higher, but again, I like GU because it is just strong because of that claimant count coming out bullish for the pound. Nikkei up, Kospi down, Hang Seng down, or up even. Chinese stocks not doing awful. Questionability from manufacturers over in China though, defo. Let's see if EU and GU start having that move up now. Noog.
Bloomberg launches our inaugural 25 African startups to watch list.
We created a solution. We are able to generate reputation using the sun and water.
But my room's in the attic. Raw, bro. I bet you're fucking scorching in your room.
We integrated in every refrigerator a pay-as-you-go technology.
August is known as one of the shittest months to trade. Yes, no volume.
Small businesses
August and December apparently. Yeah, no volume. August and December, minimal volume.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
I don't really understand that. Our top priority is Africa and making products. What do they even mean by that as well? What is even their meaning behind that? Yeah, GU for me I think is going to be really nice, Ralph. GU looks good. Especially with that nice GDP news coming out of the sort of in a couple of days' time, that looks good. PPI coming out higher, might see a bit of a bullishness from the dollar tomorrow. But I mean, we'll see. I mean, again, that's more New York session anyway, so we're anticipating still that move down. You certainly asked interesting questions. Still want to see the trade for on GU and EU. Once we get that, we'll look for the fair value you get. It's annoying we didn't come back up to the DTO though. Expecting GU to break high. We should do really, bro. That's what I'm looking at as well, WK. The continuation of GU, the continuation of EU to the upside makes sense. I just want to see the trade through of this 5 minute after we've pretty much filled most of this 15-minute imbalance, or pretty much all of it, so we can confirm that we're going to start having that move to the upside. A few more confirmations is needed. Chill life as a London trader, trust me, man. Hi mates, why do you have bonds in your watch list? Good question, bro. Why do I have bonds in my watch list? Everything affects the currencies. So I look at all bonds. I look at the US bonds, the UK, the Great Britain bonds, the Italian bonds, the German bonds, French bonds, and the reason why is because it affects the currencies heavily, especially in terms of interest rate decisions. If you see, it doesn't necessarily mean if bond prices are going to go up, it means it's good for the currency. Or if bond prices are going to come down, it massively depends on the economy. But right now, US and the UK are going to be benefiting from those lower interest rates and those lower government bond yields. Big debt, especially in the US. The US are massively going to benefit in terms of the debt-wise, from the debt perspective of those lower bond rates. But we're seeing the bond market pretty much increase. But not only that, bro, there's a reason why the bond market is important. The bond market is one of the most safest markets to be in, alright? It's the treasury. It's the same as gold. It's the same as silver. It's treasuries are pretty much the safe assets of the markets. Treasuries, we're mainly referring to bonds. When the market is uncertain, a lot of investors turn to bonds. If we know the market's uncertain because bonds are getting bought, then we know there's going to be less volume in the FX market and we're going to see less of a reason of the currency moving. So it's a good way to see if the markets are uncertain. The same as gold, right? If gold goes up, you know there's probably maybe a geopolitical reason why that's gone up. Or it might be that dollar's gone down. But that's why you look at the DXY as well. But you really got to have those perspectives from each angle. And the bond market gives you a really good understanding of where the market's at in terms of certainty and uncertainty. If the market's putting money into safe assets, you want to get away from FX, really. It's going to be very manipulative and low volume. Wrong phone again. Well, it's 5 minutes of form, so we still got, well, just under 4 minutes. That's an unreal 5 minute candle, isn't it? That was unlucky.
Well, you touch on what I've been wondering about, because we've been talking about the U.S. government's perspective, we've been talking about China's perspective, but this must be enormously frustrating for CEO Jensen Huang. I mean, you think just about the money that he's losing by not having access to the Chinese market, but then that existential fear that you bring up that maybe they're going to get left behind, that you're going to see some of their Chinese competitors really step up their game.
And look, this is the paradox, and probably one that the U.S. government, of course,
When is Putin and Trump talking?
Lisa Su and Jensen Huang play a game of ping pong instead of focusing in on innovation and in sales, when probably you're going to spark an issue here. And of course, that's exactly what's happened. They are losing a ton of money. Now we understand, of course,
Let's have a look.
Bloomberg estimates about $7 billion worth of H20 chips go from Nvidia per quarter to China. And of course, that's a nice little earner if you're able to make 15% cut on that. But in so doing, you're hearing that the Chinese
15th.
they don't want $7 billion worth.
It's the 12th today, I think that's, is that Friday? 13th is Wednesday.
Business deals with
14th, yeah, 15th is Friday.
in a overall tech stack. And also there've been some fears they've been articulating. They worry about
It's in Alaska.
efficiency. And meanwhile, all of this has been going on. Huawei has been busy trying to innovate, getting money from the Chinese government, a special tech fund. There is a lot of concentration going on China to try and outcompete. And here lies the paradox. Yes, you try and get tail, you're going to have an issue. One of the interesting things, though, is Jensen Huang had made a concerted effort to appeal to the Chinese. On Trump's inauguration, he wasn't at the White House, he was in China. So
Well,
we see
European
this
leaders
effort
are trying
from
to-
CEOs to try to play politics. Karen, we have to talk about what happened with Luc Bouton, the Intel CEO, yesterday. It seems that Trump has had a bit of a 180 after meeting with the Intel executive. And that's always what everyone prepares themselves with President Trump. And indeed, Luc Bouton has done what was necessary.
Trump says he would abandon talks with Putin if he senses an agreement on Ukraine can't be reached. Trump's doing his thing, to be fair, to try to stop this war.
With Chinese institutions, and indeed some of his own investments that he's made with his venture firm into Chinese stars in the chip sector. SMIC, he was actually on the board of that company. All of this was known, but it suddenly sparked worry amongst lawmakers, and again from the administration itself, where they called for his own ouster, for him to remove himself. He's managed to persuade President Trump.
Sweet show, my boy. I'm off as well. It looks like we're not going to come back to entry on this. But this is the bias we're sort of looking to continue with. Just want to really consider that. I'm back on the charts, obviously, in the morning. I'll see you boys for the morning call at 6:30. Boys, if you're not in the Discord, man, jump in. Just jump the fuck in. Whenever we're live, all announcements are sent in there, even when we're streaming in the morning. But yeah, let's see how this bias goes. And if you've got any questions, ask me in my DMs. Jump in the Discord and ask me, boys. I'm happy to answer anything. I'm still active.